Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We're kicking off the second day of this 4-day week with some continuation in a couple things. So let's start off with the indices. Take a look at what's going on these daily time frames. Now, what's this continuation that I am referring to? And what I'm referring to is the overall downtrend that's still in place on the broader averages. So let's take a peek. What I'll start with is the very bottom of this chart. That is the structure. So what is the context for the higher highs or lower lows when we step back and look at a collection of candles? You take a bigger picture look at what the general drift is. And just like we talk about the path of least resistance, normally when we're talking about things moving higher, the path of least support is where we are right now. There has been resistance at the mean reversion. There is resistance at the volatility level. You can see here yesterday's high went right up into that level, so there continues to be resistance. We see a high here that just about tagged the mean reversion. These are different representations of support and resistance. In this case, resistance, right? What is the resistance based upon? In the mean reversion, it's mostly price. And with the gray and gold zones, the gold zone being resistance, that's volatility. So when I have two different reasons, not different ways of calculating open, high, low, close, but rather two different sets of data that are putting lines and levels on the chart, you're going to have a much more thorough, much more multi-dimensional look at what's going on. So we still are in a pretty heavy period of time as we go into earnings. And, while there is a lot of concern that some companies will be sort of sounding the alarm in their earnings calls, for the most part, again, we're at the very onset of it. For the most part, some of that's probably baked in. If it's something, my presumption on any kind of news or headline is this: if you and I can talk about it, if you and I are aware of it, there's a very high likelihood that it's already priced into what we're seeing on the chart. Let's go jump on over to tech. There's some interesting narratives around NVIDIA and Apple. So let's take a look at the Nasdaq. Is it any exception of the trend? No, the downtrend is still in place. We still have resistance. There's a Darvas level resistance here. Here's the lines of the mean reversion. That's resistance. And of course, yesterday we hit the volatility zone, also resistance. And all this in the context of a downtrend does mean if I'm looking for setups, okay, you might say, okay, Rog, I get that we're looking at the overall environment. Absolutely. But if I'm looking for setups, it has to be, for the most part, on the daily, focusing on long puts. So looking for movement to the downside. Now, that doesn't take away the fact that on a 1-hour chart or on a 5-minute chart, if I'm short-term swing trading on a 1 hour, if I'm day trading on a 5, it doesn't take away the possibility that I could have a long position setting up. That's not out of the question at all. Yesterday, the main focus in the morning was focusing on the long side based on a number of these factors, but the way they appeared on the 5-minute chart. Remember, the 5-minute can have a completely different psychology for 2 or 3 hours or for an entire session, and it can be the opposite of the overall structure of a daily. So I'll look at each time frame as an individual slice of psychology. And, if there are going to be long positions, they're going to likely be in places where there's already some strength. Case in point, the two long positions that we have in the Sector Secrets Mastery right now are gold via GLD. You can take this with GC and MGC too. What I teach is choose your own adventure. If we're fluent in all these different asset classes, and for me, my fluency is, looking at stocks and ETFs, looking at options on those, looking at futures, and then also looking at currencies. I've done Forex trading for the better part of 20 some odd years, but I've got to pick an asset class. And a lot of times picking the asset class is not preference. We have to remember there's a different amount of leverage for each one of those. So really what it is can I manage the risk, the leverage of that particular asset class? And that's where I'll say the choose your own adventure usually boils down to where can you manage risk? So for a lot of traders who would be aspiring GC traders, and not any way to hype it up, but by trading GC through this window from the end of January to about the middle towards the end of February, this was the first six-figure trade I had of the year because it's a highly leveraged contract, a full-size gold contract. And we had this gorgeous uptrend, right? But the reason it was such a big trade is because it was gold and it had, of course, higher reward, but it also had higher risk. Okay, now other traders had, I think we did a 450% trade in this same period of time. So 450% of premium paid. So this was, I believe, about a $4 option in GLD. So this is about $4. I think by the end of this rally, these were trading at around $17. So you can see the return is very, very different. Still a great return, but the risk is what I'm talking about. So it's $100 per point in GC, right? Which is a very different, and it's a lot more expensive to hold overnight than, even if you think about $4 GLD, you could buy 10 of these. It's still pretty reasonably priced. So in terms of cost per trade, in terms of margin requirement, all of these are going to factor into which adventure you're going to choose. Who remembers those books, the Choose Your Own Adventure books? I love those as kids. And I think trading is still very much, hey, here's the scenario, and here are all the different ways you can take advantage of this particular move. It's not just one way to do it, but the way we choose is via risk. So we've got a long position in GLD. That was the trade that we alerted out. And we still have a long position in Coke. These are two of the better trends right now in the market. So it still goes back to, if I can go find a trend, I'm still going to hone in on that first. And this is the trend that we took advantage of on Coke, a 1 hour time frame or a short-term swing. So rather than having to think about 2, 3, 4 weeks to expiration, which is what I would typically do on the daily, I'm focusing more on maybe 1, 3, 5 days to expiration with Coke. And this one's already been a nice move. I think on this, if I recall, what did we scale that out? We bought these for about $1.60 a piece, and they're trading somewhere around $3.50. Now we still have 2 more days, today, tomorrow. Thursday, I'll cut the trade probably by about noon if it continues to make higher highs. But again, there are trades to be had in this environment. Not everything is full tilt and outside the volatility ranges where risk management becomes so much trickier. A lot is normalizing because the worst of the narrative has already been baked in. It's hard to shock a market that peaked at the VIX level that we saw. It's hard to kind of reshock a market that was moving well past second standard deviations of volatility. So much of that hyper type of fear was already in there. So unless something is worse than what we already thought we knew, what we were already scared of, it's kind of tough to shock the kind of moves that we've already seen heading lower at the beginning of the month. Not that we can't, but for now, it doesn't seem to be the ongoing kind of mood of the market. All right, and we are trading the mood of the market. So then the next thing I'm going to look at is the Dow. So much like most of the indices, the Dow is on the daily time frame pretty darn heavy, but you can see here it's a little bit more bullish to neutral on a 1 hour chart. So for example, if I were looking at the daily time frame, and this is where separating time frames is really powerful, a move up to this area could certainly be long puts or short the Dow futures. However, if I had a shorter term time frame, what I could do is focus on a buy on a 1 hour chart. And remember that 1 hour chart buy isn't going to have as much time to expiration or as much expectation for movement. So I can have a nice winner to the long side on the Dow and still be waiting for my short setup on the daily chart of the Dow. So if you look at the different time frames, you realize it's not one symbol. It's actually really, in many ways, 3 or 4 different symbols. Because if I added in the weekly chart, we'd have yet another set of opportunities. And that brings me to the weekly, because the weekly's been really pretty darn good to us We have a number of longer term position trades that we've been building. And Coke, actually, funny enough, we're not only in the swing trade of Coke, but we're also in a longer term position trade in Coke from $61. We're in a longer term position trade in Altria. These were all built in Q1 of this year at $51. And I think the most recent was Walmart that we just bought. And again, the idea here is to be able to have multiple time frames, so we have multiple expectation for how long we could hold on to a trading idea, and we can set our expectations for that whole time accordingly. And that's why I love saying, hey, for me, there's 4 slices of psychology: day trading, short-term swing trading, long-term swing trading, and then ultimately even these position trades. And I'll tell you, I know I've been saying this for a while now, and I'm going to continue to say it. Even though we're up off the lows, think about how many stocks, ETFs, indices are still down 20%, or even down somewhere between 10 and 20%. And again, if we say, I didn't grab the low, and that's just not then, we close the door on the opportunity, that would be really very unfortunate, because, the speed of this move was very, very quick. But I'll tell you, the last time we were super active building positions in these longer term portfolios, these position trading portfolios, was 2022. And what happened in 2022? We had another 20% plus pullback on the indices in many, many stocks. It took 9 months. So it didn't feel the same as what we just experienced, but the move was still the same move. We're 20% off the highs. And that was the last window that opened for a lot of new positions to be built. And that was throughout basically mostly Q3 and Q4 of 2022. The window is not closed yet, but please, if you haven't put that shopping list together, do it, because this allows you to say, look, I'm taking advantage of a multi-year time horizon. I'm taking advantage of maybe a few days like I am with Coke, or maybe, potentially a couple of weeks like we are with gold. And it really allows you to compartmentalize as well. It's if you're a retail trader like myself, and that's really what I consider myself, for the most part, even though I've got this great community, right? We're team trading, we're sharing ideas, we're focusing on similar tactics, similar layouts, similar tools, right? So we're all looking at things in a way that we're multiplying the ability of one person to find trades across hundreds of traders. And that's really powerful, because, one of the reasons, when I talk to my buddies who are team traders and they're in prop firms, one of the things that separates those traders that do really well from those that don't is this concept of having lots of traders looking at the market in a similar way. And obviously 2 eyes are better than one, 100 eyes are better than 10. And as long as everyone's trained in the same type of philosophies around position sizing, risk, and what an opportunity looks like. All right. So that's a pretty good, I think we have some questions here. Let's see. All right. Good morning. Good morning. All right. Michael asks, is my bias or edge up or down for this week? Michael, it depends on which time frame we're talking about. If the bias for the week can never be set when I'm day trading. I would never do that, because one day might be up, next day might be down, one day we might do nothing. So I'd never set a bias for the week when day trading, and I'm sure that makes sense. Okay. Bias for the 1 hour chart, I also would not set that for the week. I may be neutral on a Monday, and on Tuesday, the uptrend organizes. It's probably a little bit easier to have a bias for the current week on a 1 hour chart, but I still want to be fluid enough, remembering that this could shift in and out of trends pretty frequently, not as frequently as a 5-minute, but it's a little easier on a 1 for short-term swings. And on a daily time frame, yes, I can have a general bias, but please know, I don't want this idea of bias to be I'm predicting what's going to happen this week. I still find it absolutely comical that, grown adults will listen to other grown adults and believe that one of them can predict the future. I think we all know that's not true, but I like how you phrased it. What's my edge? Well, my edge on the daily time frame, depending on what I'm looking at, right? My edge on the daily, say on Walmart, is up. I'm bullish. But if you ask me what is my edge or opinion of Apple, it might be very different. It's still minorly bearish. If you ask me what's my edge or bias on, say, financials, right, for the week, it would probably be bearish to neutral. So I never want to think about, and I know I'm just as guilty of saying it as anybody else, but there's no such thing as the markets, right? There's only bonds, currencies, indices, metals, energies, etc. And then there's all little niche within those. So I really want to make sure that when I'm going through my watch list building process, and I'll be doing a lot of that today, this morning at 10:30 when I'm in the Sector Secrets Master Room, as well as Simpler Central. That comes from this. For those of you that are unfamiliar with this layout, this is that multi-chart. This is what's unique about the way that I scan. Not only am I grouping together stocks that belong to a certain index or sector together, I'm lining them up in order of their weighting, and then I'm looking at the relative performance. So it's a very comparative process, and that's one of the things that I've done for many, many years. That's giving me, you talk about edge. That's a huge edge. Most traders don't do that. Most traders don't define relative performance to a specific curated group. Most traders are not looking at, do I like gold miners or do I like gold miners and Newmont mining, right? So that specificity matters a lot. And that's where this particular layout is so valuable and so powerful to the watch list building process. So Michael, the bigger question is, where am I looking in terms of specific sector or index? Let's see. Eddie asks, if the VIX goes up a certain percentage, does this SPX go down a certain percentage? I mean, it will. I do not, Eddie, I don't look at the VIX, right? So let's, if I'm going to look at the VIX, number one, I'll look at VIX futures, and I look at it as a futures contract like crude oil or gold or bonds, no different than that. It's a futures contract. And when you look at the VIX futures, what you can do, and this is kind of cool, is you can start to look at the different contracts. This is a 30-day view. So I can start to compare what the VIX for the current front month is to maybe 3 months out. So you can see where the fear is localized, where the fear is really focused. And sometimes there's not fear going forward, right? Sometimes the fear is where we are right now. So I like the VIX futures because I can look at different contract months. So that's the first thing. The second thing is I'm not looking for the VIX to give me direction. I'm looking to see if there's heightened volatility or not, right? If there's heightened volatility, that's really first and foremost not a directional conversation. That's first and foremost a risk conversation, right? I'm sitting here 30 years later. Actually, it's a lot more than 30 at this point, but it's just easy to say 30. But I'm just sitting here 30 years later with two things. One, I've consistently grown an account, my trading accounts for 30 years. Doesn't mean I'm making thousands of percent every year or even hundreds of percent, but I've consistently grown, never had a negative year, and I've never blown up an account. So the reason I can say those things is because I put risk first. So notice even with the VIX conversation, it goes right to risk, not direction. If I want direction, Eddie, here's what I'll say. Use the VIX maybe like an indicator, because it is a market internal as much as it is a futures contract. So if you're already seeing signs of weakness, and if you don't have a process for that, definitely stay tuned to Charts and Coffee, because that's what I do in the morning. What am I looking at? Why would I be bearish? Why would I be bullish? So look at that directional bias and then look to the VIX to see if there's something to be had. Because the tricky thing with looking at the VIX for that is the VIX, in my experience, is far more interesting and helpful at extremes. So a lot of you might remember I shared, and that could be intraday extremes, that could be end of day extremes, but you might remember I shared this particular image about the VIX closes and what that typically means going forward 1, 2, 3, 4, 5 years in S&P total return. So again, I find it a little bit more interesting at those inflection points, especially at extremes, than I do from a trending perspective, because I can look at the ES itself to understand what the SPY, or in the case of your question of the SPX, I can look at the ES to determine that. In fact, I can even get a jump start on that by looking at the ES futures, not the SPY or the SPX. All right, great stuff. Thank you as always, and same thing applies to SPY. Michael, any version of the S&P. Yeah, any version. Those are called the Raghee squares. Eddie, I like it. The layout, yeah. It's just something unique that I've done, and it just makes it really easy to visualize that relative performance scan. All right. Good stuff. All right, gang, be good to each other. I'll talk with you soon.